Q1 is in the books, and we patiently waited 45 days to finally get a glimpse at the portfolios of the best investors in the world. And oh boy, I found a lot of very interesting stock picks in some of the portfolios I follow. And maybe the two most noteworthy investments revealed by the SEC 13F filings are Michael Burry's $36 million bet against Apple. He's effectively shorting Apple, and a $600 million bet on Apple made by the legend Warren Buffett himself. So two legendary investors apparently take opposite positions in the largest company in the world. And in this video I will discuss who is likely right on this bet, and I will also consider the details of each respective investment, and I'll show you what Buffett had to say about Apple during the most recent Berkshire Hathaway shareholder meeting. And as you can see, there's a lot to unwrap here, so without further ado, let's get started. Alright, so let's start with the portfolio activity of Michael Burry, who leads the investment firm Scion Asset Management, and who is best known from the movie The Big Short and for successfully shorting the housing market and banks before the financial crisis of 2008. And as always, he has been fairly active and actually invested in a bunch of different stocks. To give you a bit of a perspective on how actively Burry trades stocks. Burry held only 6 stocks at the end of December 2021, so Q4 2021, and fast forward 3 months, and by the end of Q1, his hedge fund exited all of those holdings except for Bristol Myers Squibb. But Michael Burry also added a lot of stocks to his portfolio in the most recent quarter, including Google, Meta Platforms, and Booking.com. But his biggest bet, with a market value of around $36 million, is a bet placed against Apple, and that bet accounts for around 18% of Burry's long positions. And he's betting against Apple by purchasing so-called put options against Apple shares. And as of March 31st, Burry held 206,000 of those shares in his portfolio. So let me just quickly explain how Burry is betting on Apple's stock going down by purchasing put options. Well, put in a nutshell, by buying so-called call option contracts, you are betting that a stock's price will go up. And as I said, by purchasing put options, you are placing a bet on a declining share price. A put option contract essentially gives the buyer or the owner of that option contract the right, but not the obligation, to sell the stock at the predetermined price, the so-called strike price, during a predetermined period. For example, if you buy a put option that has a strike price of $50, you have the right to sell that stock at $50 a share, even if the price of the underlying asset is below $50 a share. But let's just look at Burry's concrete example, Apple. So let's assume after doing some research, Michael Burry has concluded that the price of Apple's shares will decline. Let's say he bought the 206,000 put options with a strike price of $171 a share, which is where Apple was trading in early February. Burry would then have the right to sell all 206,000 shares at $171 a share. Let's say he'd exercise those 206 put options at Apple's current price, which as of May 18th is $145 a share. Now here's where it gets interesting. Investors don't need to own the stock to buy or sell a put option. So Burry could just buy the shares of Apple at the stock's current price, so $145 a share, and then sell them at the strike price to the writer of the option contract. The differential between $171 and $145 is $26 a share, and that's essentially the profit he makes per share. And if you multiply this by 206,000, you end up with Burry's total profit, $5,356,000, minus of course the premium he had to pay to the writer of the contract to buy those put options. Now there is a caveat though. We are making a lot of assumptions in that example here. Unfortunately, the 13F filings of the SEC do not reveal the expiration date of put options, and the filings also do not reveal the strike price of the option contracts. All we know is that at the end of Q1, Michael Burry held options against 100,000 Apple shares. But we don't know how long they are valid for. Maybe they have expired a week after the end of Q1, so in early April. Maybe they were valid for just one more month, or maybe they are still valid, and as Apple's share price continues to decline, Burry's profit will continue to go up. We just don't know. All we know is that in Q1, Apple was trading in the range of $150 to $185 a share. So if Burry still holds the put option contracts against Apple, he's most certainly in the money, meaning that Burry would see a profit if the options are exercised at Apple's current share price. Now, before we consider why Michael Burry is betting against Apple, especially relative to other tech stocks, I just want to very briefly consider Warren Buffett's activity and why he is taking an opposite position here. So if we consider Berkshire Hathaway's 13F filing, then we can see that Buffett bought even more Apple shares in Q1, adding another 3.7 million shares to Berkshire's already largest position. Buffett actually spoke about this investment during the Berkshire Hathaway 2022 shareholder meeting. So let me just quickly show you a short sequence from that meeting and what Buffett had to say about this investment.
In the first quarter, they just reported, they're on a fiscal year, but they just reported their March quarter, and they earned more money and they had fewer shares outstanding. And we actually bought a little more Apple in the first quarter. So we decided we wanted to own a greater interest. And on top of that, we knew that we would own an even greater interest if they kept buying in their shares, which we didn't have any insider information or anything, but certainly would seem the way to bet. And we feel better because we bought the shares we bought in the market, and we feel just as good as by the fact they use their cash to buy out some of the other people. It is the simplest thing in the world. And then I read all this stuff. It is unbelievable how people can't figure out something that, if they owned a farm and the guy next to him had a farm, and somehow you were getting more of his farm all the time without putting up any money while you farmed your own farm, that at least if you're using some of the earnings for that, you'd feel very good about it.
Buffett has actually previously praised Apple for the strength of its brand, its durability, the high visibility in terms of where the business is heading, and of course the capital allocation decisions made by Apple's management team. And in this clip he supported this view, as he also talked about buybacks, which in turn increase the stake of already existing owners. Now it seems like Apple was only shortly trading at a price that Buffett was willing to pay during Q1, as he increased his position only by a marginal 0.4%. Again, the low in March was around $150 a share. And interestingly, since Buffett's $600 million bet in Q1, Apple's stock has actually fallen close to and by now actually below that level in Q2. So Buffett could very well be picking up more shares right now. And I bet this is actually what he's doing right now at lower prices. So clearly, Buffett and Burry are taking opposite positions here. So let me just quickly outline why I think Burry took a short position against Apple. Well, the iPhone maker's stock has basically quadrupled since the start of 2019. So the stock was up more than 400% when it was trading in the $170 range. At the same time, Apple's revenue is only up around 40% over the same time period, and its free cash flow is up only 57%. So apparently Apple's stock has benefited from an expansion of its valuation multiple, as you can see on screen right now. And Burry may have concluded that as Apple's stock held up relatively well during the general market decline that we are observing in 2022, that eventually it is supposed to go down with the rest of the market. There's this saying in the investment world that the so-called generals always get short last, and it seems like we are witnessing this right now. And as Apple is not really a high growth company anymore, just consider its past revenue growth rates as well as future revenue growth estimates. Burry probably thought that Apple's stock is destined to go down along with the overall market now, and it will experience some kind of multiple compression. So who is right on this bet, Buffett or Burry? Well, Burry's bet against Apple is obviously much more aggressive, considering that it is the largest position in Burry's long portfolio. Buffett, on the other hand, just added a tiny bit to the already huge position within the Berkshire Hathaway equity portfolio. And I think it's important to point out that although Buffett and Burry seemingly take opposite positions here, both can actually be right. And this may actually, surprise some of you. How can they both be right if one is short Apple and the other one is long Apple? Well, I already hinted at the fact that both follow very different investing philosophies. Buffett, on the one hand, is a long-only investor with a very long investment time horizon. So he would not sell Apple shares unless he thought the competitive advantage of Apple is eroding. So he would not sell it even if the stock may be overvalued temporarily. And Burry, on the other hand, follows a different philosophy. He's a much more short-term investor, short-term thinking, trading in and out of positions during each quarter, as we have shown at the beginning of the video. And of course, Apple can easily be a great long-term investment, while at the same time be a great short-term short, which I believe it is right now, as the business is certainly facing multiple short-term headwinds, such as the lockdowns in China and generally a negative consumer sentiment. And of course, we are witnessing an environment in which valuation multiples are being compressed. So again, Burry may be right in the near term, or he may have already liquidated that position, and Buffett might at the same time be right about the long-term trajectory of Apple. Now, if you want to learn more about another tech name that Michael Burry is actually betting on, Meta Platforms, I would recommend you check out the following video next. Take care.